Hi, this is Shane with The Rational Trader. It is Wednesday the 16th. We're going to spend most of our time talking about oil, max loss today on oil. But let's take a look at the other ones real quick and get them out of the way. The yen is in sim, but it is now running a new model. There were no trades today. There was some, you can see the opportunity. That's overnight, but let's see, right here. This is the day session. So starting from here on the left, it says Euro open, but it's 5:20 a.m., which is when we start trading the currencies. I like where we're looking, and I like these, the looks at the basket here on the pullbacks to the value area low. The market's breaking lower here. There's an actual signal there. I have it printing a blue dot. I need to change it so we can see that as we evaluate the new codes, but not an actionable signal. I wouldn't have gotten it filled anyway as it happens. Because it just fell from there. All right, so, and actually way there, but that's after when we're done trading. So it occurs to me that you may not be able to actually see that little dot right there. In any case, all right, so that's running fairly conservative, I would say. And then gold, no trades today, though there was some interesting movement here. There was one move, you had to catch it basically right off the open in through here. You could have got it as you broke through the value area high, and then it got sideways. So no trade. So we stayed out of trouble having missed the nice move. And then the euro is, we've changed it to a faster chart, and I now have the I've just been running it to see that it's working. I now have the analysis, or I have the data. I'll try and get that analysis tonight. So we're actually running something tomorrow. Okay, so this is the open here, right here at the left. This is an ugly day here. It might be related to the whatever's going on in England right now with the European Union exit stuff. But what we're looking at here is that it is generating signals. It looks reasonable. It doesn't look too fast to trade. You actually have to sort of like what you see in terms of getting short. It sees that peak. Same thing, getting short. Here down here, getting long. So all that looks okay. Now let's get some analysis done, and we'll get some codes, actual behavior and action codes in there to see what's going on. Let's talk about oil. It's Wednesday, so it's oil news day. Minus 160, so max loss. You've heard me call this the Babe Ruth of trading days for oil, because you either strike out or do really well. So Babe Ruth was the home run king and the strikeout king at the same time. What I want to talk about tonight is mostly related to what I have come to believe is the primary benefit of using a machine learning system to trade. And that's the removal of human anxiety and fear from the trading decision. And in fact, it's not just the removal of that from the trading decision, but you actually remove or you have the opportunity to remove all of the fear, anxiety, doubt, excitement, greed, euphoria that you would normally feel when you're trading. Often minute by minute, second by second, sometimes you're getting these inputs to your emotional machinery that can just tie you up in knots. And by using a machine learning system, you can eliminate that input to your emotional machinery to once per day. This is what I do. So I started off in the morning, and then at the end of the day, I look and see, and I get that one input. I'm either, happy or disappointed. Now, it's difficult to overstate how important this is, because it's that problem, it's that issue with human nature that causes all of the slew of problems that retail traders have. It comes from this emotional reaction. Now, let's look at this. Let's look at oil. First, let's look at the analysis. So this is, and let's remember how this is built. In fact, let me pause because I didn't bring that up. I don't have it prepared. Hold on. Okay, so what we're doing is we take a model, a model architecture, and we give it data through in this case, through the end of September, and we train the model on that data. And then we use that model once it's finished. It takes a couple days. Once it's finished, we run it against data that the machine's never seen. So in this case, that's October through sometime in January. Okay. And what we do is we give it each bar and say, okay, what would you predict on this bar? Okay. And then we take that information and we run a simulation that says, okay, if I traded this particular behavior, what would the result be? And we do that for all of them. And there's, 40 or 50. And we take the best ones and we say, okay, these are the ones we see the most often that have the highest profitability with the lowest number of trades. And we use those in our daily trading. Okay. All right. The analysis is run then with that subset of codes that we've shown to be useful. And what makes it difficult is that you can have, beyond trying to predict the future in general, what makes it difficult is that you could have a particular market behavior that worked really well in one time period, but was lousy in others. And so it might end up being a net loss if you chose to trade that particular behavior. When I say behavior, what I'm talking about is the combination of price action and order flow that we give the machine as data to train on. All right, and so we break that up actually into buckets, and then we look at what's best in each bucket, and then we come up with a subset, and then we run that subset for all the buckets to try to eliminate those cases where you've got one-off behaviors that were good, but that are not but you only see ones. All right. Okay. So with that in mind, we run that analysis, and what that analysis does is it actually runs through the trading day with the trading parameters that I use, including what is the daily max loss value, which for oil is 2 trades or 14 ticks. So we tell the machine, we tell the replay program, the simulation program, if I've lost 13 ticks or more, stop. Or if I lost more than 13 ticks, stop trading. All right, and then just go to the next day. And then at the end, we add all that up. How many times did I see a max loss day out of how many total days? Okay, so this was 58 trading days seen, so that's 12 weeks, right? 60 divided by 5, yeah, 12. So 3 months of data, and so intellectually, I know that just over a quarter of the time, I'm going to take a max loss. I know that in service of making this profit. Okay. Now I don't actually expect to make that. That's 847 ticks. So that's $8,470 across 3 months. That's an insane return. If I got half that, I'd be happy. All right. I use this number more to help understand. Is there an opportunity there? And then as I'm running different simulations to compare them to each other. Okay. So there's clearly opportunity. That's what that says to me. And I'm expecting to take a max loss day just over a quarter of the time. Okay. Now, I understand that intellectually, and I'm perfectly willing to take that. If this number is too high, then I keep looking. I keep refining the simulation. All right. Getting more conservative so I can get that to a reasonable number. But it doesn't change how it makes you feel. Even though intellectually I understand that, yeah, a quarter of the time I'm going to take a max loss, and it's going to be painful. All right. So one of the things that we can do here is look at, okay, well, how is that tracking to what we're actually seeing? All right, back from a minor interruption there. How is that tracking to what we're actually seeing? All right, so if we look at oil and we look at the trade activity log, and we crossed contracts, so we got to look at two of them. So here's the F contract. We started this on 11/26, and I see 1, 2, I see 3 max loss days. Okay, out of 12. Okay, so 3 out of 12. And then I see what the other thing you got to understand too is that this doesn't mean that these 15 days will be evenly distributed across the 58 days, right? You're tracking to about a quarter of the time you're going to take a loss, but there'll be bunches where you do and time when you don't. What I found interesting about this is that actually sort of looks pretty evenly distributed, which is a little surprising. Let's look at G now. We've got more data here now. This is 19 days. So a total of 31 days. And this has how many? 1, 2, I'm going to call that a max loss day. 3, 4, 5. Okay, so 8 total out of 31. Yeah, that's just over 25%. All right. So it is certainly in line with what with our expectation. And back from one last interruption, I hope here. Now if you look here, this one's a little more clumpy, right? You see, there's a couple here. There's one here. This one followed a couple of other small loss days, so it feels worse. All right. This is the profit since we switched to the G contract. Like this section here felt that one there feels worse. This is a holiday week, but because you just taken a couple small loss days, all right? And the point is that it's very easy to have a set like this and go or like this, right? This is like not terribly happy here over the last 6 days, and go, I need to make a change. All right, but that's too small a sample size to make a change off of. If you look at the larger sample, well, it's tracking just sort of as you expect. Now, don't take this like there's some guarantee that you're only going to see that. That's not the case. My point is that it's not wildly different, okay? And so when I analyze it, I go, okay, this looks okay. It didn't look okay for the euro, which is why I went and did a bunch of work to reanalyze and change that, and we'll see how all that works out still. Okay, now this is coming up because I had a number of members. Hey, what about this? What about this? What about that? And you're reacting emotionally to the market is what you're doing, and it's that reaction that's going to cause you trouble. Right? The whole point of what we're doing here is that we remove the ability of your emotional reaction to impact your results. Okay, as long as you can control yourself at the end of the day and not go changing a bunch of things. Okay, and you can still do that. Unfortunately, I'm working on a longer term plan where you can't even do that. Only I can change it. And so the point is that you can't allow that visceral, physiological, biological reaction to govern the actions that you take. That's what got you into trouble in the first place. That's what gets everyone into trouble. Everyone that starts trading runs into this. Everybody. And I've seen it for years. And in fact, and one of the drivers behind what I'm doing here is to completely remove that reaction from trading. All right. So the short version is, you have a data-driven way to make a decision. You've made that decision. You have risk management as a trader, and you manage your risk. That's what you do. Okay. And so if you're trading, an account that's X size, you're willing to take, Y loss per day and Z loss per week. When you hit those losses, you stop for the day, you stop for the week. That's how you manage your risk. Another way to think about it is that a trade that loses money is just a cost of doing business as a trader. It's no different than the meat that the restaurant buys. Okay. And so you are managing your costs. You're keeping your costs down by managing your risk. All right. So for some people, that particular way of looking at it is very helpful. Okay. All right. So where do we stand here for the week? 160 plus 122 down 280. Okay. And we'll see what tomorrow brings. Depending on the size of your account, you may have hit your weekly loss limit and you're done. I haven't hit mine, so I'll keep trading. I'm also running a trading room, so I tend to have to keep going anyway to show the system running. Though I suppose I could switch to sim, but it actually hasn't happened yet. Now that I think about it, I haven't hit a weekly loss limit since I started this. Okay, so that's it for today. If you are feeling if you're feeling anything, you have to watch both ends of the spectrum. You've got to watch the greed, and you've got to watch the fear of loss. Okay, so when all you're doing as a trader is managing risk. If you're reacting in either of those ways, that's a red flag to stop and go back and look at your data, make decisions based on data. All right, that's it for today. Take care.